my neighbors. Well, good morning from me. Sun is just cresting and about to be rising up as the markets have closed for the second trading session of December. And my second attempt to do the market recaps, as it is now 5:02 a.m. as the closing bell has just rung 2 minutes ago. Here we go with the Dow Jones closing green on the day. Nothing of any concern, but the IWM abandoning that 246 as it closed on the lows of the week. QQQ did everything it could possibly do, filling the old gap from prior on Thanksgiving week and reaching right back up to plus 55% off of the April lows, only to have completely run out of gas with nothing else to get pumped, as it failed right back, almost filling the overnight gap, but retracing up thinking, I can do it, just like one of those Bitcoin Muppets that think you're gonna go back to all-time highs and higher. So here we are with the SPX, and today we finally got to see the 5-day moving average on the lows as we filled the gap, and we stayed above yesterday's lows, which were just below 6,800, and we climbed right back up, not once, but twice, back up to that 6,840, and as you went into the close there, that final hour, your 6,840 had cooties as you broke to it, just above it fractionally as you were going into the last 30 minutes, once again, just prior to the mock imbalance into the last 10 minutes of the day, and then, sorry guys, but we're done. So let's kind of see how we did for the day, right? The email going out there at around 6:15 a.m. this morning for everybody on the East Coast to be able to wake up and read it quickly while they are taking their morning shit. Tuesday, December 2, Fibonacci Spiral Top Search. Fibonacci Spiral date. Do your own research on that if you are not a member. Good strong start to the month yesterday. Full credit over there as we played off on the 68.30, 68.25, which I already talked about, so no reason to talk about. So, as we said, to bounce SPX to fill the 68.49 gap and plausibly reach up for that 68.73. We filled the 68.49 gap, and that was all you could luster up. So with this in front of us, it's time to think bullish, as I sent out in the morning. I don't know why I forgot to change that date. Again, I am human. I am not a robot. I forgot to change the second part of that vertical trade for the SPX credit spreads to December 2. It was kind of obvious with it being December 2. Anyway, enough on that. December 2, 68.20 puts. Buy them, sell the 68.25 puts, looking for a close above 68.25. $3 or better credit is what we are looking for. The fib spiral, blow it off, bullish play risk, obviously riskier. 68.35 puts 68.40, looking for a move / close above 68.40, $4 or better. Futures are overbought, which is why you saw your dip. And again, if we do not get an algo day, which is nothing but green days all morning, a dip to 62.825, 68.12, gap fill is all that should be seen. And that's all that you did see. Here again, QQQ in charge, IWM, we want that 248.75 gap to fill, however, it's IWM. So again, like I shared, this is not a bounce to chase. The old joke of the young bull and baby bull sitting up at the top of the, or Papa bull, top of the hill. Again, you're on that resistance line, Fibonacci spiral, blah, blah, it's enough on the email. So let's go just to have a recap of the chat over on the spread room specifically. Bullish resistance is the theme for today, 6:11 a.m. so that you know. There's a couple of PCS setups in the email to look at. If we can get a gap fill to 68, the 68.49 gap fill, I'll send out some CCS to have for the afternoon session. Well, we got that quite early. This is not a day to be a blind bull. Again, let it go up, and then just like yesterday, we search for a decent paying call credit spread. The open, the December candle, only the NASDAQ as it is peaked, 68.55, 68.50. Call credit spread, looking for that resistance play. Only at $1.50, $1.80. Only at $2. Should see 68.49. Still hadn't got there yet, 9:59 in the morning. And here we are looking at the high placement for this week. The current high is only 68.86. Only at 2:30 at the moment, 68.55, 68.50s. And therefore, here we go. Putin came out, started pissing all over everybody that supports Ukraine. And I was saying there's a 30% chance that we're going to see above 68.49. Russian roulette risk, $2 is the best that you'll see on that 68.55. We've only got a 17-point range, so you're definitely going to get a little bit more. It's not a sell-off. And later on, you wound up getting that move, kablank, back to getting up there so that you got your plus 250 on the 68.55 calls, 68.50 calls, credit spread, ending full credit. Down to 30 cents there at 2 o'clock. Coin flip for a plus or minus 68.25. 90 minutes into the close. And again, you ended your day right there. 68.29.37. So you got your 68.25 close right above it. Your 68.40 high risk bullish put credit spread, $4 credit. Only 30 minutes left in the trading session. Ample opportunities to be able to take greater than 100% profit on your $1 risk, even 200% profit, as you had pops above 68.40. However, for those with smaller accounts, it's the question of, do I use a day trade or do I let my $100 at risk per contract go into the bucket if it should sell off, which is exactly what it did there at the end of the day. So we were right, but you've got to put an asterisk on one of those we were rights because the 68.40 did not end full credit. You only had a, call it, 20-minute window to be able to take better than 100% profit. So quick look, which I'm going to make an attempt at here, of looking at our FANG, our Mag 7. Well, it's no longer FANG. If you Google Dingleberry, that's what you're looking at with Google. You look over at Apple, and again, Apple having reached to where I wanted to see on the Apple, we got our trade off on Apple. Over here on Meta, just continuing to do its climb up to the upside, which I have no faith in whatsoever, other than the fact that it sold the fuck off and paid exponentially on our Meta puts that we were into well back in September. Over here on Tesla, again, you started to get into that crack selling zone. You broke down into where you're supposed to be, which is down below 425. You got your dead cat bounce, and whether you like it or not, 425 is your first spot that you're going to be seeing again. Over on Amazon, they came out with suddenly they're now making chips, and they're going to give NVIDIA a run for their money, which NVIDIA's fucking got nothing but dirty money. And here you go, closing up on the day, 54 cents, but pushing back onto that 23.28, and unfortunately not reaching up to my you can be blind and make money on Amazon puts trade. And here's your NVIDIA. Jensen Huang spending money, not spending money, but people pay him to come out with wear his leather jacket, go on TV. Came out talking about how all these people want to order our fucking chips, and where did you go? Right back down below that 181.81. So enjoy your Tuesday, enjoy everything that you got going on, and because you are not a member, I can't really give you any, good advice.
Are you stupid? Are you a stupid person?